Welcome to another S&P 500 Trade Watch analysis. Today is October 16, 2022. The S&P 500 did a 190 plus point reversal after a discouraging CPI report on Thursday. Then on Friday, reality set back in and the S&P 500 gave back most of the gain from Thursday. A couple of FANG stocks, Netflix and Tesla, are scheduled to report earnings this coming week, and most likely they will generate some additional volatility for the market. In this video, we'll map out some potential scenario for the SPY, QQQ, IWM, Apple, Tesla, and Netflix, and identify some level to monitor for the coming week. Stay tuned. Now let's start off with the SPY here. Taking a look at the SPY, notice that the price came down to the lower range of the expected move on Thursday before it bounced back up after discouraging CPI report. And it came back up, closed the week inside of this weekly range and at the lower half. Also, the other thing is, notice that I have this expected move for Friday, and you see the price essentially swung from the upper range to the lower range. So that was a pretty big move on Friday. Now, switching to this weekly chart here, I basically have updated some of the price zone. And the key price zone to keep an eye on is this one here, sitting right on top of the pre-pandemic high. And that is sitting somewhere around 339. And that is pretty close to that 3,400 level that everybody is eyeing on the S&P 500 cash index. So keep an eye on this zone here. Zooming in into the daily price, we notice that the upper range for the coming week is between 371 and 369, and the lower range of the weekly expected move is between 346 and 343. Now, the upside scenario is for the price to bounce back up into this zone here near that 370 zone and into this weekly upper range. And the downside scenario is basically come back down and dip below the 50% retracement and into the lower range, and then proceed down to the pre-pandemic high and into this 339 price zone. Now, don't be surprised if we get some discouraging earnings next week. We could see price work itself toward this 320 level that's down near the 618 retracement. So keep an eye on that level for potential target as well. And for the QQQ, it broke down from this balance area and tagged the 618 retracement level. And if we zoom in on the daily chart here, and we could see the price came down and tagged this lower range of the weekly expected move, and it closed down at the lower half of this weekly expected range. But it did close above the 618 retracement level. And on this weekly chart for the QQQ, I highlighted a high volume edge volume zone here, right underneath the expected range, the lower range of the expected move. And the upper range of the weekly expected move will be between 273 and 270. And the lower range of the expected move is between 250.70 and 248. For the coming week, the upside scenario would be see if it could bounce off of the 618 and come back up toward the upper range of the expected move. And the downside scenario is to break below the 618, come down to the lower range of the expected move, and push through this high volume zone and toward the pre-pandemic high near the 237 area. Now, if there is some negative earnings from Netflix and Tesla, and they create a huge sell-off, we could possibly see it break below the pre-pandemic high and move down toward this 786 and somewhere around this 220 area. The IWM finally came down and tagged its June low. And notice that it did not come down and tag the lower range or went up to the upper range, although it did close at the bottom half of the weekly expected range and above the June low. And on this weekly chart for the IWM, I also put in a couple additional price zone here, and it is from this composite volume profile, and that is essentially covering this area here, this time period. And I have a low volume zone here that is down at the 145 area. And also I have a high volume edge here right underneath the lower range of the weekly expected move. So for the coming week, the upper range is between 174.50 and 173.15. And the lower range of the expected move is between 160.50 and 159. Now, the upside scenario is that we see it would be able to bounce back up above this 50% retracement level and move up toward the upper range. And the downside scenario is to come down to the lower range and to this high volume zone and work toward the 618 retracement down near the 152.52 area. And Apple came down to near this 382 retracement level. It did not come down into the lower range, and it bounced back up, and it too got close at the bottom half of the weekly range. But it is still above its June low here, so we're still waiting for Apple to come down and tag its June low near the 129 area. And on this weekly chart, I also updated some price zone here. There's one right here sitting right near the 382 retracement and also the lower range of the expected move. Then we also have a price zone right underneath its June low. And here's the upper range of the expected move for the coming week. It's between 145.35 and 144.25. And the lower range will be somewhere between 132.50 and 131. So for the upside scenario, it's essentially just watch for the price to come back in to this upper range. The downside scenario is come down and break the 382 retracement and move into the lower range and see would it be able to hold that lower range. If it's not, then look for it to come down and take out the June low, and that will push us down near the 127.50 area. Tesla continued to move down last week, and it came down to this lower range, this lower weekly range here. It was able to stay above or inside of this balance area. It did come down and dip below and close below its May low. Tesla is scheduled to report earnings after the close on Wednesday. So on this weekly chart, we put in a high volume zone here right on top of the lower range of the expected move. And that's basically right here near this the low volume zone. And pretty much in this price area here that is appeared to have provided some previous support. And here's the upper range for the coming week for Tesla. It's between 231.25 and 224.85. And the lower range is between 185.15 and 182.25. For the upside scenario, it is basically looking for the price to come up to this upper range. And if there are some extraordinary results or guidance, then we could see a possibility of moving up to this zone up near this 255 area. Downside scenario is basically looking at this zone coming down to the lower range of the expected move. And if we see a disappointed earning or some disappointed guidance, then we are essentially looking for this move here on right down near this edge. And that could be bringing it down to somewhere around the 155 area. So be aware, anything is possible for Tesla. And Netflix is scheduled to report earnings after the market close on Tuesday. And all eyes will be on the new subscribe ad numbers, because from last quarter, the company gave guidance that it expects to add 1 million new subscribers. Any number falls short of that 1 million, or God forbid, if it is come in of negative, it lost subscriber instead of adding, watch out. We could see a fire sale on Netflix. So here's the composite volume profile. Essentially, I'm just going making a composite volume profile here, and we see that most of the volume right now is concentrated down here in this area. And right now we do have a low volume zone right above this weekly expected move, the lower range of the weekly expected move. Then we also have a high volume edge right underneath that, and that is somewhere around 185 area. So let's go and zoom in and take a look at the daily price. So here's the upper range of the expected move for coming week for Netflix, 271.25 and 259.60. And the lower range of the expected move is between 200.40 and 197.50. And that's a plus or minus $30 move. And the earning could push that even larger if the number is negative. Positive, I doubt that it will get anywhere above the upper range. I'd be surprised that it would even come up to this level here at this peak here, somewhere around 252 area. So for the coming week, the upside scenario is to see would it be able to come up to this high volume zone near the 250, 252 area. Now, for the downside, we essentially are looking for this low volume zone to get taken out and move down to the lower range of the expected move. And if there is a extreme negative reaction to the earning or guidance, then look at the possibility of coming down to this 185 area, this high volume zone, or the potential resistance turn support. So there you have it, the scenario for the SPY, QQQ, IWM, Apple, Tesla, and Netflix. Now, based on the market internals that I have put forth on my weekly S&P 500 analysis video, clearly kind of put me in a bias leaning on the downside. So I expect some continuation on the downside for the indexes, for the S&P 500, and also for the SPY. And if we do see some extreme negative reaction from some of the company that going to be start reporting earnings, and especially from Netflix and Tesla, we could see a potential huge sell-off caused by these two stocks. Also be reminded, Wednesday is the 35th anniversary of Black Monday, and that is the day after Netflix report earnings. Pay attention to Netflix earnings. It could trigger a tech sell-off to celebrate the Black Monday anniversary. And be sure to smash the thumbs up to help promote this video on YouTube. Thank you for watching and stay safe.